what would be some of the most common questions that people ask you when it comes
Yeah.
to crypto taxes?
So I guess, the first is when do you actually have to pay tax on crypto? So let's just cover that off real quick. I think um, a lot of people are shifting mindset now to accepting that they do have to pay tax on their crypto. And, I'm generally in the conversations I'm having, people realize that crypto is taxable, but there's just a lot of confusion around when it's taxable. And I think often there's a lot more taxable events that people realize, and it's only really until you plug in software or kind of really sit down with your accountant and understand what you've been doing that you kind of realize, oh, like I've got so many transactions that I have to record for my taxes. So yeah, the first one is obviously crypto to fiat. If you're cashing out crypto, at that point you need to consider that whether you've made a gain or a loss. um, Crypto to crypto exchanges. So if you're transferring Bitcoin to ETH, for example, at that point you actually dispose the Bitcoin. So you have to work out, you know, whether you've made a gain or a loss at the point you exchange it. And then you have to record the cost basis of your ETH, so the price at which you've purchased it for, um, and then kind of actually understand in the future whether you make a gain or a loss when you then go and later sell that ETH. So crypto to crypto is one that catches a lot of people out because there's a bit of complexity here. What happens if you're wrapping? A lot of tax authorities at the moment are seeing wrapping as disposal events, even though it's really the
Oh,
same kind
wow.
of underlying kind of token with a few extra features to allow it to be used on other blockchains. So yeah, that's one that we don't have clarity on from most tax authorities, but it's one
Yeah.
of those things where
So do you think that's
people in
because people gained arbitrage opportunities off of that?
I actually don't. I think it's just because the tax code and kind of guidance hasn't caught up. And if you imagine, there's not many crypto native people working in tax authorities at the moment. I believe that is changing. Particularly in the IRS, they are trying to crack down on their kind of understanding on crypto. We know that for a few reasons, but
Hmm.
I think we just still haven't caught up to really understanding how people are using this space. And for a crypto native user, wrapping tokens and bridging is like you wouldn't even think about your tax consequences, right? You're just using one protocol, and potentially, it's just yeah, it's very confusing to many people how that can be actually a trigger for a taxable event. But it's just something to watch out for. The other way you can kind of dispose of crypto for tax purposes if you spend it. So if you're spending crypto for goods or services, if you've got a card that's linked to your crypto balance, every time you pay for things, you'll be potentially up for tax. You have to work out if you've made a gain or a loss. And if you earn crypto as well, and by earning crypto, I don't mean actually being paid a salary through crypto, but I mean, you know, yield, earning yield, staking, mining. Those are generally seen as income. And I'm using IRS as a main example, but yeah, I think a lot of tax authorities globally see staking as income, and you're basically up for tax when that staking reward is derived. Again, there's questions as to when or the timing of that because, for example, ETH, uh, you can't spend your staked ETH yet, but it might kind of show up in your balance. So, there's all sorts of issues around that timing as well.
Yeah,
The
that's
other one is
interesting.
just airdrops and forks as well. So, again, there's kind of different approaches across different countries, but generally airdrops and forks in the US would be income.